how do we do bigger deals and like I said, bringing investors along with us so that they can be true passive investors. Write a check, be part of a larger deal where they're not dealing with tenants, they're not in there making any kinds of repairs. There's professional property management on site, and they can basically start growing their wealth.
Welcome to the Peak Profits Podcast, your guide to maximizing returns in passive real estate investing. Hosted by Brian Morris and Chris Ward of 7 Peak Capital, we dive into conversations with industry experts, sharing insights, strategies, and stories to elevate your investment portfolio. Whether you're a seasoned investor or just starting out, this podcast is designed to give you the edge for financial freedom. Get ready to unlock new opportunities, discover the secrets of successful investing, and take your passive real estate investments to the next level. Now, let's go reach those peak profits together.
Welcome back to Peak Profits. Today we are joined by Jaden George. Jaden started his real estate by house hacking while in college and acquired his first property at 19. Realizing the power of multifamily and wanting to making it widely accessible, Jaden founded HorizonTen Properties, a real estate investment firm focused on partnering with best-in-class sponsors to provide high-quality investment opportunities to its investors. Jaden, we're extremely excited to have you on the podcast, and we'd love for you to introduce yourself and share your background.
Absolutely. Chris, Brian, thank you so much. We've known each other for almost a year now. I can't believe it's been that long, but really appreciate you guys having me on, and excited to get into it.
Yeah, man, we're excited to have you. As you mentioned, I think we met you last October down in Orlando at a conference, and was immediately blown away by, obviously, you're younger, and you started getting into it in college, and you really specialize in the underwriting and the numbers, and would love to get into that today, and I'm sure we will. But, can you share a little bit about, what got you started into real estate? Chris mentioned a little bit in the intro that you started house hacking in college. I know you went to Tennessee Tech, so can you just bring us back to that point where you really started this journey for yourself at such a young age?
Yeah, man. So let's see. So real estate, how I got into real estate was actually through my father. That's kind of where the spark came from, and kind of where what happened there is growing up, my dad, actually not even growing up. I think I was, maybe right before we moved I was born in North Carolina. Right before we moved from North Carolina, my dad bought a little 3-unit property. And he just held it as a rental, and I never really knew why. I never really honestly cared enough to ask. But I was in there, helping him paint, I remember helping him paint some rooms.
He had you doing the dirty work.
Renovations and stuff. Exactly. Yeah, I was the free labor, right? So I was the reason it cash flowed, right? So, but yeah, so like I said, I never really dove in, never really asked why he had it. I just that was something that he had. And then one day, I think like early high school years, I just kind of asked him, maybe we were driving somewhere, and I was just like, hey, like, tell me about this real estate thing. Like at that point, he had bought a couple more units in Florida as short-term rentals. So he was up to, 4 or 5 units. And, I just started learning, and he was telling me, and I was like, wow, okay, so, like, you make this much in rent, but the mortgage is only this much. So there's a little bit of passive income there, right? Probably didn't use that word, but I was like, okay, so he didn't work for that, but he sees that money, and then also look how much it's gone up in value over these last 3 or 4 years. Again, didn't really do anything for that money. And so I was just kind of like right there. I was like, okay, like real estate, just put that in the back of my mind. Like, that's what I'm going to do. On the side though, like I still, all throughout high school, I loved physics. I loved numbers, calculus. I was that guy. Like I was that nerd, and I loved the math side of things. And so I was going to be an engineer or something, but I was going to acquire some rental properties on the side. That was where it was in my mind up until COVID hit. And I don't know why, COVID was just like a weird,
crazy
for everybody, I feel like. Yeah. But for me, what happened is I just picked up, I don't know what exactly started it, but I picked up the book on rental property investing by Brandon Turner, and I started listening to the Bigger Pockets podcast, but all around the same time. But that book really just spelled out the whole thing from A to Z. Here's how you acquire a rental property. Here are the different types of rental properties you can acquire, different strategies, and literally just how to do it, A to Z. And I was like, okay. Like, I was just like, okay, check, and on to the next. I mean, I was hooked. Like, on to the next one. Books, podcast, everything. Probably, I think the second one was Rich Dad Poor Dad.
Yep.
After you read Rich Dad Poor Dad, there's no going back, right? So it's like that. It completely shifts your mindset. It's not how much money can I earn and how high can I climb the ladder. It's how quickly can I get off the ladder,
Yeah.
the corporate ladder, right? How quickly can I completely shift? Like my value system completely shifted from working my way up a company to never having to work for a company. Like how do I buy assets and the cash, and how do I make enough cash flow to support my lifestyle, all that stuff. So that was really what happened there. And somewhere in there, I heard somebody on the podcast who was also in college, and he was talking about how he had bought it was either a 2 or 3 unit property. And I was like, holy crap, like somebody out there has done it. And that was all I needed, was somebody out there's done it. I can do it. So right there, like written down goal was I want a 2 to 4 unit property before the age of 21. And so that was it. Like that was what I was focused on, and that was what I was going to do. And I was 17 at the time, so I gave myself 4 years. You know, I was working. I never really made more than $13 an hour up until like all throughout pretty much before I bought the property. But I saved 90% of it. Like I can go back and show you. I tracked everything. I saved 90% of every dollar I made. It wasn't many dollars, but I saved all of them. And yeah. So
You
like
really
that
are a
was,
math guy if you tracked every single one of those
yeah,
dollars all the
literally.
way
I don't
from
know
the
if
age
I'm
of
proud of that.
17.
Yeah.
You
Yeah.
should be proud of it, Jaden.
Yeah.
I mean, you were able to achieve your goal in half the time of what you had set yourself out to. That's definitely something to be proud of. Maybe you can not be so proud of the tracking side, but I disagree. That's incredible that you were able to, at $13 an hour, get yourself to a position where you had saved that much to go ahead and buy yourself the 4 unit. But sorry, carry on.
Yeah, no, look, so I mean, also, I mean, another thing that happened during COVID was the once in a, like, I can't even take credit necessarily for this, but every dollar that I did save, I was putting into Delta Airlines stock. So I had watched, and my dad and I did this together. You know, we watched April, or I think it was, yeah, March of 2020 happen, and Delta Airlines stock goes from 60 to mid 20s. And I had never really messed around with the stock market. I'd never really understood. I still don't really understand. Like stocks, it's not my game. But I knew this was a once in a lifetime thing. Like, you know, a $1 billion company is just not gonna go under and stuff like that. And whatever. So I basically put all of my savings into Delta Airlines all throughout 2020, and it steadily went up until I bought the 4 unit. I would say, like, I think if you average it out, because I just was consistently buying throughout 2020. So I think I made an average of 80% on my money that went into Delta Airlines. Wow. And so that definitely helped a lot. And so that put me in a position to where freshman year of college, I was basically so I was 18 at the time when I started looking. I was like, okay, this might be possible. Let's at least start like looking and running the numbers and making sure that, you know, I know how to run the numbers and I know what a deal looks like when I see one. And so that's what I did. The second half of freshman year, I was like, well, I'm going to have to move out. I was living in the dorms, right? But I'm going to have to move out of the dorms at the end of the year. And so, like, how cool would it be to have a place by then? And so just started looking on the MLS. It was a listed deal. And this wasn't the first one that came up. But there was duplexes and stuff. But again, like a key point here is knowing how to run the numbers, like knowing a deal when you see a deal and not just buying the first thing that you see, right? So I had developed that skill at this point. I had made my own little spreadsheet where I could say, okay, this is how much I can get for rent. This is all the operating expenses, and this is how I'm going to finance it, and what do the numbers look like?
How did you get yourself to that point, Jaden? I mean,
Sure.
at the age of 19 to already be underwriting to that level, what tips, tricks, where did you kind of teach yourself some of that stuff. Was that in the Brandon Turner book? Did it give you all of that information? I know in Bigger Pockets, they have a number of different calculators. I myself started searching through Bigger Pockets during COVID, trying to buy a single family home, and was unsuccessful after hours and hours and hours of underwriting. Like, so how did you teach yourself to get to that point?
Yeah, so I mean, getting to that point was honestly just a byproduct of all of the information that I had essentially downloaded over like the year of 2020 to 2021. Like I said, I was listening to podcasts. Like, when I say that I listen to podcasts, here's what I mean. I mean, the summer of 2020, I started working at a warehouse, 40 hours a week. Like, school had let out, and I was like just trying to make as much money as I could, and so I was at this warehouse 40 hours a week. I'd wake up at 5 a.m. and it was a 6 to 2 shift. And they let us listen to music. So we could have one AirPod, we could have one earbud in. And so I was literally like, just, dude, so listening to these podcasts on 2x speed. So just 80 hours worth of content a week, just downloading into my brain. And the question there is, did I really retain all of it? And the answer is absolutely not. But even if I retained 10% of it, it was enough, right? Like, it was just it. I was so what I did there was, if you think about it, I mean, I basically was able to sit in on, probably over 1,000 hours or 1,000 conversations with some of the top real estate investors, business owners, entrepreneurs, um, just everyone on all different parts of their journey, and was able to sit in on those conversations and just learn, how do they think about things, their mindset, how do they, like, anything from a morning routine to tangible skills, such as how to I was aware of the Bigger Pockets calculators out there and stuff like that, but what I did was I just opened up a blank Google Sheet spreadsheet, and I did it myself. Like, I learned, and so that was invaluable for me, because that kind of started this fundamental base of financial modeling knowledge that I have, an experience that I've accumulated that really translates super well into the commercial side, which I know we'll get into in a second. But
Yeah,
yeah,
that's awesome. Yeah, and I think that's a respectable way. In a lot of way, people start right if they have no background knowledge or don't really come from the space. You were mentored a little bit by your father, which you mentioned, which is awesome and a great way to start. And at least you had some guidance. And more so, it sounded like residential type of real estate, right? Under 4 units, but still had properties. You saw the power of it, and then you dove into books and podcasts, and really credit yourself for getting you up to speed as to where you were able to get to at such a young age. And then having that, I guess, niche or interest in numbers and the physics of and the underwriting aspect of it. I know remind us again how old you are today.
I'm 21 today.
You're 21. So in a matter of 4 years, right? And we'll get to your story of as where you are today, but you went from educating to now working on deals. I know you have an active deal. You closed on one, I believe, earlier in the year or late last year. So that's super impressive. What today now do you, with the underwriting models, right? I know you've created your own. Why do you feel like you really transitioned into understanding and appreciating that aspect of the business? Because underwriting is not easy. A lot of people don't like to do it. A lot of people don't like to dive into the numbers and really break it down. So why do you feel like you really felt like that was your strength and you really enjoyed that part the most?
Yeah, no, that's an excellent question, Brian. And really, the answer there is by necessity.
Mm-hmm.
And what I mean is, after I made the shift to commercial multifamily real estate, and I started playing with the bigger players, and I realized that you hear it all the time, but commercial real estate is a team sport. So whereas residential real estate, you can usually take it down by yourself. You might have you have some lending relationships. You might have an agent on your side, but really most of the money comes from yourself, and you might have a capital partner here or there. But like I said, it's usually all yourself. The commercial side, it's definitely a team sport. When you start talking about 2, 5, 10, 20, 50 plus $1 million deals, there's a team there. And so what you learn is there's different roles that you can play on that team. And so for me, at 19, with a 4 unit, that doesn't really translate to the commercial side. That's not a lot. That's not real commercial multifamily experience that I can go and take and start talking to brokers. Hey, send me 100+ unit deals. Yeah, not really, right? Because it doesn't translate. So what I realized is I have to partner with people that do have that experience, that are getting good deal flow, and that are able to raise capital. So what I was saying is you learn that there's different pillars to this whole commercial real estate space. There's acquisitions, right? How do you find a deal? How do you underwrite the deal? How do you find good deals and know that they're good deals? Then there's capital raising, which is how do you fund those deals? And that's debt and equity. So that's debt relationships, and it's cash. How, like, where's the cash coming from? And that's talking to investors, raising equity. That usually comes with a track record, right? And then there's asset management. There's experience of actually, once you close the property, how are you running it day to day and making sure that it's operating to the best that it can, and you're delivering for your investors. And so what I realized is, as a 19-year-old with no commercial real estate experience, I had to take what I can get. And what I could get was that acquisition side, and even more specifically is the underwriting. Is, like you said, a lot of people don't like underwriting. That it can be very nitty gritty, and you can lose a lot of people for sure, just by talking about it. But I realized that was my opportunity.
I was going to say, arguably the most important aspect of it, right? It all comes down to that, the numbers and how you're making the deal work.
Absolutely. I would argue it's the fundamental, it's the basis of everything else, because you have to understand the underwriting of the deal and different metrics and the sensitivities and how everything affects everything else, so that you can go and pitch it to an investor, or you can go and pitch it to a bank, So that was definitely, I kind of realized, like, this is my in. That's my way to get my foot in the door, because people that are good at talking to brokers, people that are good at talking to investors, usually don't have the personality to live in Excel for a day, just underwriting deal after deal after deal after deal. So me, as a 19-year-old who has all the time, has no money, has no access to investors, has no access to really good deals, but I have all the time in the world to just underwrite for other people. So that's essentially what I did pretty much the last half of 2022 and all of 2023, is I pretty much just worked for free. And I focused on building my network and learning the ins and outs of the business, and learning what deal flow looked like, how to build it, even operations and stuff like that. I didn't see a whole lot of operations because, spoiler alert, I didn't close any deals. Pretty much worked for free, right? So, but the experience was invaluable.
I just want to bring us now back to the house hacking portion, and some of the people listening may not understand what that is. This may be the first time that they've heard the term house hacking. Can you explain, once you had identified the property, you had gone through, you had done your underwriting, you're 19 years old, how do you go about taking down this property, and then how do you go about house hacking it?
Yeah, great. So yeah, of course, you identify the property, and then the real work starts, right? It's not just you identify the property and then 60 days later you're good to go. So this was, let's see, this would have been February of 2022 is when found it. The next day went up, because that was, think about it, back in February 2022, that was when stuff was going. And stuff was on the residential side, stuff was off the market the next day. So the next day I was on the property, touring it. And the day after that, or that day, we submitted an offer. Again, I kind of had my dad in my corner, because it helps a lot to have somebody like making sure that, am I making a mistake? Like, am I doing something stupid? And while he didn't necessarily, he understood the fundamentals, and like I said, he was a real estate guy on the side. It's not what he did full time. It's not, and I definitely took it a lot further. Like I took it a lot further than he did, but like I said, just having him kind of like a sanity check, like, hey, can you come walk this property with me? That was invaluable too. I have a lot to owe to my father in that regard. So we submit the offer and get it accepted 2 or 3 days later, and now I'm under contract. And now is when I realized that all of the books that I had read, all the podcasts I listened to, didn't mean anything. Didn't mean anything.
You're like, oh shit, I got it now.
Yeah, exactly. Like, it's like, well, now what? Because nothing really prepares you for You guarantee a 30-day close. You're 20 days in. You thought you could get an FHA loan that you'd be able to fund yourself. And then they tell you 20 days in that you can't, because you can't have and there's a couple of reasons why. And knowing what I know now, I probably would have dug a little bit harder into that. But essentially, the basis of the story is 20 days in, we basically had to find completely new financing. And at one point there, my real estate agent even sent me an amendment that basically canceled the PSA. He was like, "Hey man, sorry about your luck. On to the next one. I'll send you a couple deals." And I was like, "No way, dude. Give me the week. Like, let me just figure this out." And so, after talking it through and just thinking and looking at all my options, we found a commercial lender, a local, a bank. Basically, that was the problem, is I had to get a commercial loan. There's also 6 acres attached to the 4 unit, so I guess not a bad problem to have, right? But I couldn't get a residential loan on it, and ended up getting a commercial loan. It was 15% down, which I did not have. So I basically had to structure a second note coming from my father. And it's easy to say, like, oh, your dad gave you a loan, like, of course, but that wasn't necessarily how it was, because I had to know my stuff.
Mm-hmm.
Like, I had to show him, hey, here are the numbers here's the underwriting, here's what's going to happen. Worst case scenario, here's what happens. And that's why he was a debt partner and he wasn't an equity partner. And so there was a little bit of creative structuring there. And yeah, so basically that was how we were able to get it across the finish line after those hiccups. And
a couple things I want to touch on there quick.
Uh-huh.
That's awesome, because you basically didn't give up on the deal, even though the realtor even told you, this one's not going to work out, move on. And you're like, no, I'll just find a different way to structure it, which, as you know now in the space and underwriting, there's a million different ways you could potentially structure a deal as long as you get creative. So kudos to you in that way. I'm curious, a couple things you mentioned, FHA loan. Can you just explain what that is real quickly, high level?
Yeah.
I use an FHA loan to buy my first 3 unit as well, and I think it's super beneficial for people who are looking to buy potentially their first house or house hack. And then why did you have to end up going commercial rather than residential for that property?
Yeah. So high level FHA loan is essentially it's a loan that allows you to basically buy a 1 to 4 unit property with only as low as 3.5% down. And so that was the plan going in. That was how I underwrote the property, because that's all I had heard on the podcast for the last year. And I was like, okay, that's what I'll do. I ran into a couple of issues for me, and I think it was, again, this was all like a big mess going through it. And knowing what I know now, I would have dug a little bit harder to figure out why the residential loan wouldn't have worked. I think the FHA loan specifically wouldn't work because I couldn't have a non-occupying cosigner. I think somebody told me that. I don't know if, like I said, I was just happy to get the deal done. And it was 2.5 years ago at this point. I kind of like got it out of my mouth.
Any way to get the keys at the end of those 60 days.
Right.
And you did it. Yeah. So whatever you did, it worked.
Right. And that's a whole another story is closing day was super happy. Super, super excited. I was marking down the days on my calendar, closing. And there was, even leading up to it, it was like we had to extend it. And finally, I think we did end up doing it in 60 days. But then the real stuff happens, right? Then now you got 4 keys and you got to figure out, actually I only had 3.
Now you're a
right?
landlord.
So that you can kind of imagine. Yeah, so there was a long-term tenant in one of them, and the owners didn't even have a key to the unit. But anyways, yeah, like that was where the real work started. And so my summer was super interesting that year. It was sleeping on an air mattress in one of the units and turning 2 of them simultaneously. Now, luckily the units, the renovations were mostly cosmetic, right? So I was just in there painting. There wasn't a whole lot of real, like, there was no mechanical stuff or anything like that. A couple new appliances and stuff like that, but mostly cosmetic. But that was my summer. It was just turning all 4 of those units. And so closed late April. And by mid-August, all 4 units completely stabilized, up to market rents, and smooth sailing from there. Knock on wood. Right. But yeah.
You mentioned there that you were sleeping on an air mattress. You were painting the properties yourself. I think those are things when people think about investing in real estate and owning real estate, everyone just looks at thinks about, oh, look at those shiny dollars coming in and look at the monthly cash flow that I might have, but they always forget that there is the work in a residential property that you ultimately have to go in, and you may have to do the painting yourself. The hot water heater might break, right? There's so many different things that happen as part of that. And you obviously have lived through that and breathed that yourself, not only with houses that you were doing for free with your dad, but ultimately when you went and did this for the first time yourself. What was it that made you transition into commercial completely, instead of going down the path of I'm just going to buy another duplex, I'm going to buy another fourplex? Like, why did you immediately make that jump into the bigger commercial properties?
Yeah, so I mean, part of it you touched on it, but I will say honestly, after that feeling of mid-August, all 4 units returned, and I could finally breathe, I was like, I was honestly ready for the next one. Like I got, because you get that bug and you're ready.
Gets
Like
addicting.
I text my real estate agent with no dollar, like no money in my bank account. Text my real estate agent, hey, ready for the next one, man. Just send me what you got, right?
It drained you, and you're like, you're gonna
But
buy the next one. I'll figure out how.
yeah, I'll figure it out after we sign the PSA. But yeah.
Give me another 60 days and we'll get there. That's
right. Just make sure we get those extensions baked in, and I'll figure it
yeah.
out. But no, what happened was, yeah, if you would have asked me August of 2022 what was next, I would have said save up for the next one, the next 2 to 4 unit, and just start stacking like that. What happened was later that month, or maybe just around that time, I go on to Crexy, and I've heard that from a podcast guest. Crexy is basically like Zillow, but for commercial property, right? And I see that there's a listing for a 22-unit property that I pass every day to go to class. And I was just like, interesting. Like, I didn't even know that those buildings went up for sale. Like, who, like, you know what I mean? Like, who's buying this? But I look at it, and there's the OM, which is the offering memorandum, which is just the nice, pretty brochure of the deal, and breaks down the financials and all that stuff. And I was just looking through it, and I was like, it's just like, what would it take to get something like this? Like, what would it take? And I had known enough. I had listened to enough podcasts and books and all that stuff. And I had known the fundamentals of commercial real estate as far as NOI divided by a cap rate, right? I knew how it all kind of worked. I knew how to value it. And I knew that, okay, if the NOI is whatever it was, let's just say the NOI was $100,000 today, and that's what they're valuing the property on today, but rents were, I don't know, 40% below market, and there's super inefficient costs, and I could see that pro forma NOI, basically I could push NOI, net operating income, essentially just the bottom line, right? Income minus operating expenses, and NOI, and I could push NOI to 150,000, and I could directly see how I could increase the value of the property 50%. And this property was listed for $2 million. I could see how I could literally take the property from a $2 million property to a $3 million property. All of that sounds great, and that was how I was thinking about it. Obviously, us three, like, we know that it's not always that simple, and that OM was probably full of a bunch of BS, but it doesn't matter because it was the mindset, and it was I had seen those numbers, and I knew, I was like, holy crap! Like, again, what would it take to get this done? And I knew that it would just take, like, whatever, it sounds like, this is a ridiculous thing for a 19-year-old to say, right? But what I audibly said to a couple of people was, man, like, the only thing between me and this deal is $500,000. $500,000. If I could somehow get that I would be able to close this property and do all the renovations, and now I know, I mean, that's probably more like probably more like 800,000 or 900,000, but it doesn't matter, right? In my mind, it was 500,000, and that's what it would take to do it. And I could sit here just feeling so helpless, and it was like, man, I'm one contact away. Like, somebody would be more than happy to write me a $500,000 check and double their money in 2 years. And so that was like, that moment, I remember, like, that was where it shifted, and that's where my vision was shifted from 2 to 4 units to 20 units plus. How do I get into this? How do I do it? Next time I see something like this, I'm going to be ready for it. And that was the shift. Yeah.
That's awesome. And I think to your point, a lot of people who are in the space who maybe start with single family or small multis and residential get some type of aha moment or realization as to I can scale this larger, and how do I do that, right? And that was awesome. I didn't even know about that story, even though we've known you for a year, and that was how you kind of transitioned the thought process. And to your point, as a 19-year-old, it does sound crazy, but it's the principal thought of this is possible. Let me think bigger. Let me think how I can scale that. And now,
Right.
just literally 2 years from now, you're 21. You have started HorizonTen Properties, right? You have closed on bigger deals. So, with that in mind, when did you start HorizonTen, and what is the basis behind the company that you started today in the commercial space?
Yeah. So HorizonTen Properties is basically founded on that exact idea of doing bigger deals and bringing investors along with me, so that they can. Chris, like you mentioned, a lot of people think when they think of real estate, they think of the passive income and buying a single family house, but what they realize is that's super hard to scale, and they're probably going to find themselves on an air mattress painting some walls, right? So it's this is basically the how do we do bigger deals, and like I said, bringing investors along with us so that they can be true passive investors, write a check, be part of a larger deal where they're not dealing with tenants, they're not in there making any kinds of repairs. There's professional property management on site, and they can basically start growing their wealth. And our tagline is accelerate wealth and broaden horizons, right? The whole fundamental idea is this is a whole different tangent and something else that I did after real estate, but I got started with buyinglifeback.com. I started that website, and that was a blog all about financial independence and working towards it and what it was. And so this is kind of a full circle kind of moment, is now that I have the real estate experience and the commercial real estate experience, now I'm turning around and helping passive investors along on that journey, doing more than just writing blog posts telling them about it. Now I'm offering actual opportunities to start, like I said, accelerating their growth, broadening horizons, and ultimately dreaming bigger. That was my tagline for Buying Life Back. That's kind of, I have it all over my room. Dream bigger.
I love
Right.
that.
You should add, if you don't want to sleep on an air mattress, invest with HorizonTen Properties.
That was actually my email that just went out yesterday.
There we go.
Yeah.
But that honestly, your story, Jaden, is absolutely incredible, especially your journey at such a young age. To go from nothing to having a portfolio now of over 50, soon to be even bigger with the property that you're currently working on at the moment. What would you kind of share with somebody who is going through this journey for the first time? What are some of the key fundamental lessons that you would share with somebody if they were to ask you for like your top piece of advice?
Sure, man. One thing I always like to say is to bet on yourself. That's one thing that that's my almost my guiding thing. I will say, like I said I was working last year all for free. I was serving at a restaurant here where I live. I was a server, and I would come home and underwrite these properties when I got off. And I finally, I got to the point where I went on a big, it was half study abroad and half solo travel trip last summer, and so I found myself in Italy on a train. I remember, and I was like, dude, I like I have all these skills, and like I know that I know that I can do more than what I'm doing right now, and I'm basically letting this serving job basically steal my time. And so I sent a text to my boss, and I basically quit. And what I did at that moment was jumped out of a plane with the intent of building the parachute on the way down. Right? You hear that saying, and that's what it was. Is because while I was in a great spot, I didn't really have any living expenses. I was only living on $300 or $400 a month, but I was working 20, 25, 30 hour weeks and serving for $15 an hour, $15, $20 an hour, where I could have been building my network and underwriting more deals and doing stuff like that. And so I basically was like, look, I'm going to find a way to monetize what I'm doing here. And so I got back and just went all in. And that's what I mean is betting on yourself, knowing that I had the ability to monetize all the skills that I had and to start working on doing deals and building my network in order to get to that point. So that's what I would say is bet on yourself. There's a number of other things I could say. Your network is your net worth. You hear that one a lot. Being in the right rooms, just being super intentional about who you're spending time with and who you're learning from. One more I would say, similar to what I did with the underwriting, but find a skill and build that skill and then turn around and offer that skill as value to somebody who's where you need to be or where you want to be. Because again, if you're at a point where you have time and a skill, and somebody is where you want to be, and they don't have the time and they need the skill, that's a great way to get your foot into any industry, real estate or not.
Yeah, no, that's great advice, and your story speaks for itself in that you've lived exactly what you just said, right? Like you're dedicating your time to surrounding yourself with education, with the right people, with mentors. We met at a conference. Like, as I mentioned earlier, like I was blown away that you were so young, right? And you were at the conference looking to learn about multifamily real estate, right? At 20 years old or 21 years old. And just the journey when you reflect back in 4 years and only being 21, I can only imagine, right? You keep applying these types of, philosophies and holding yourself accountable, like where you're going to be at when you're 30 years old, right? So with all that success and that learning and experience over the last 4 years, what are you looking for? What is Jaden looking to do? And what is HorizonTen looking to do over the next 2 to 3 years? And what is your idea of growth for your business and your company?
Yeah, I love it. This is the big question. This is the question that everyone should be asking themselves all the time: is where are we going?
Mm-hmm.
And so another thing I did when I got back last summer was I sat down at a coffee shop for 2 hours and wrote out a vivid vision. You guys might be familiar. There's a book called Vivid Vision by Cameron Herold, and it's essentially just down to every detail, visualizing where are you in, I think he says 3 years, I did 5 years, but and just what does it look like, every aspect of it. And that really helps you to visualize it, and then helps you to gain clarity on the steps necessary to get there. And so what I did, and where HorizonTen Properties is heading, is 5 years from now, I want to own and operate $100 million worth of real estate. In order to do that, I have to raise probably $30 to $40 million of equity. So that basically means, how I frame that in my mind is, I have the opportunity to bring along 300 to 400 investors and help them on their journey to financial independence, and help them to buy their life back, to dream bigger, to accelerate wealth, to broaden horizons. And so that's what drives me. Yeah.
Trust is obviously crucial in that equation there, Jaden. People aren't just going to send you $30 or $40 million in equity. How do you go about building trust, maintaining trust with your investors as you're going along that journey?
Yeah, look, trust comes down to, I would say, communication and transparency. Investor relations goes, and it's constant. It's clear, accurate, and constant communication, and so that's in the form of transparent reporting. So telling investors how the property is doing on an operations standpoint, as well as maybe even the economy and the market on a more macro level, but doing that in good times and bad times, right? Not going silent when something is off course. Actually being more communicative, just picking up the phone and calling and saying, hey, here's what's going on, here's what we're running into. And that will do wonders for sure.
I completely agree. I think as you start to partner with more sponsors or get into more deals, you start to realize which ones or which communication style is the most impressive, or the ones that are the most transparent, and the ones that make you feel the most comfortable as an investor. And those are the ones that you're going to continuously go back to. And I think that's a huge component in this business as well, because it's not always going to be right sunshine and rainbows, right? There might be months, or there might be some periods within the property that you're going to have a transition or a period that's not always, bright and rosy, right? So I think that transparency is super important. And so And you make a great point there, Jaden, with the trust and transparency. So at Horizon 10, I know you partner with different sponsors and different operators that are buying these properties in certain markets that you identify. So what's your criteria in looking at different sponsors and operators, and how are you really doing your due diligence on them and building relationships with the operators to feel comfortable in partnering with them and then ultimately bringing investors into those deals?
Yeah, right, Brian. I mean, so you mentioned, like you said, we partner with best-in-class sponsors to deliver high-quality investment opportunities to our investors. And your question was spot on, right? The sponsors are the most important part. They're the ones that are actually operating the deal. They're the ones that are, maybe they have in-house management, maybe they have third-party management, but they're at least the asset managers, and they're the ones making the decisions day to day, right? So that our investors don't have to. And so I've gotten to a point, luckily, where I do have a lot of deal flow, and I'm able to kind of pick some of the best sponsors. And what I'm looking for again is back to the communication piece. That's huge, but also and the track record is big as well, right? But really digging down into the track record, if there's one word, it's operations. Because a lot of times what you'll see operators that had a really great exit, but they had a great exit in 2022, right? And they bought the property in 2019, and their IRR is phenomenal, but they only held it for 3 years. And I want to know how much of that exit was performance based and how much of it was the actual cap rate compression. And so without getting too into the details, essentially what I'm asking is how much of that success was due to actual day-to-day operations of the property, and how much of it was due to just market forces that were almost out of your control. Now, granted, you can take some credit for that. Maybe you picked the right market and you picked the right time and you were bullish, but I'm not going to necessarily buy that if your NOI was stagnant or declining and your operations were failing and you were bailed out by a 50 basis point compression in the exit cap rate, and that was what bailed you out, and that was what got you over the 30% IRR mark. So understanding that is massive, because like I said, you want somebody with great operations and the ability to really drive NOI, because then it's less dependent on the market. You could have adverse market forces and still perform on an okay deal. A great sponsor can overperform on an okay deal. So that's definitely what I look for, and that's kind of how I vet sponsors, and those are the types of opportunities that we present to our investors.
Everyone is in the space is talking about 2024 being the year of operations and really tightening up how operations within the multifamily space works because of some of the challenges that we've seen with the interest rates. And your point there of really analyzing, is that just because of the market cycle we were in, or is it because you were actually performing to your business plan, which ultimately ties back to the underwriting that you're going through on a day-to-day basis to make sure, look, if we've underwritten the property in this way, how accurate is our underwriting? And are we going back to validate against that underwriting as we're going through our monthly or quarterly reportings, projections, and how does that ultimately need to change? So that's obviously a fantastic way to go about providing due diligence, especially, and building trust that you're not just going out there and bringing any deal to your potential investors. You've taken the time to understand why you feel this deal is also going to be a good deal as well. Where can people reach out to you, Jaden? Is there a website that they can go to? Is there a LinkedIn page? You also mentioned your blog post. We'd love for you to just share where people can reach out, where they can find Jaden George. I think we said this to you when we were around the fire pit. The future, I think, is what we had called you there at such a young age, being able to already be at this stage of your real estate journey. Like, where can people find Jaden the Future George?
Yeah, Chris, unfortunately, I haven't gotten that Instagram tag yet, but I am working on it. No, so on Instagram, people can find me at Buying Life Back. So that's BuyingLifeBack. And then, let's see, LinkedIn, Jaden George, just like it's spelled. And also our website, HorizonTen Properties.com.
And everyone go check Jaden out. As you can tell today, no matter what age you are, you can get started in this industry. And he is the epitome of being able to, age is just a number, right? And you've done amazing things already by the age of 21. And we're excited to see where your future is headed for you and Horizon 10. And we'll definitely be in touch about your current project and future projects because we're excited about what you're doing as well. But we want to thank you for coming on today on Peak Profits. You were a great guest. You offered some amazing advice and honestly, inspirational stuff. Like what you've done in 4 years has been incredible. You're still only 21. You act like you're 30. Your knowledge seems like you're 40. But no, we're excited to see where you go from here. And thanks again for joining us today.
Brian and Chris, thank you so much. Thank you for your time. And I appreciate the opportunity. Thanks, guys.
Thank you for tuning in to the Peak Profits Podcast. We hope today's episode was not only inspiring, but packed with actionable insights for your passive real estate investments. Subscribe so you never miss an episode. And if you enjoyed the show, please leave us a review. Your feedback fuels our passion to bring you even more valuable content. Stay connected with us on social media and visit 7peakcapital.com for exclusive resources and updates. Until next time, keep striving towards your financial goals and let's reach new peaks together.